The Institute of Supply Management, ISM, Manufacturing Purchasing Managers Index, PMI, report on business is based on data compiled from monthly replies to questions asked of purchasing and supply executives in over 400 industrial companies. For each of the indicators measured, new orders, backlog of orders, new export orders, imports, production, supplier deliveries, inventories, customers' inventories, employment, and prices, this report shows the percentage reporting each response, the net difference between the number of responses in the positive economic direction and the negative economic direction, and the diffusion index. Responses are raw data and are never changed. The diffusion index includes the percent of positive responses plus 1/2 of those responding the same, considered positive. The resulting single index number is then seasonally adjusted to allow for the effects of repetitive intra-year variations resulting primarily from normal differences in weather conditions, various institutional arrangements, and differences attributable to non-moveable holidays. All seasonal adjustment factors are supplied by the U.S. Department of Commerce and are subject annually to relatively minor changes when conditions warrant them. The PMI is a composite index based on the seasonally adjusted diffusion indices for 5 of the indicators with varying weights: new orders 30%, production 25%, employment 20%, supplier deliveries 15%, and inventories 10%. The prices paid subcategory is a diffusion index calculated by adding the percent of responses indicating they paid more for inputs plus 1/2 of those responding that they paid the same for inputs. The resulting single index number is then seasonally adjusted. The prices paid diffusion index is one of a number of indicators pointing to the degree of inflationary pressures in the economy. A higher than expected reading should be taken as positive/bullish for the USD, while a lower than expected reading should be taken as negative/bearish for the USD.